Price is compressing, volume is fading, and patience is being tested. This is usually where the market makes its real decision. Okay, we're on a 5-minute time frame here. Let me reveal an important trading secret to you. Using the trend as an example, I will now show you how to identify pullbacks within its movement. So we need only one indicator here now, the accelerator oscillator, and it is already on screen and requires no adjustments. Now let's break down what it's known for as divergence. So first, a brief explanation of oscillator. It's a mouthful. This indicator measures the rate of price changes. The faster the price rises, the higher the bars. When momentum slows, it declines slightly and gravitating towards its center line. We can connect the indicator's peak points to form trend lines. I'm going to show you this. If this line slopes in the opposite direction of the price chart, it's called a divergence. So this scenario serves as an early warning signal. You can see with this red line here, I'm hinting at a potential reversal or minor price correction. As you can see here, the asset dipped slightly after divergence. So we could have identified this in time and opened a short position, profiting within the upward trend. But divergence occurs frequently on charts. All you need to know is to monitor the oscillator and track slopes of its highs and lows. So crucially, the price direction must diverge from the oscillator. So here, for instance, there's no divergence here. Let's examine another valid example. Here we'll see a clear uptrend and the price slope is upward, confirming a bullish trend movement. At the same time, I can spot a divergence that would provide us with a perfect entry point. By connecting recent indicator highs, we see a trending downward over the spin with a price where the price action rises. So identifying this in advance will clearly signal an impending price decline at this juncture. So we'd essentially predict another counter trend reversal here. This demonstrates the power of trading divergence. Now I'll locate another example, this time in a downtrend. So here, let me show you. We've observed the downward movements with accompanying divergence. The new bars formed a slightly higher low, preceding the gradual slowdown and chart reversal. We can identify larger scale divergence here where the price began recovering. As before, we conclude divergence provides early warning signals indicating potential reversal points. So it's time to transition to live trading. But first, let's recap. Divergence represents discrepancy between price and indicator. When an asset declines while the oscillator shows upward momentum, we can expect bullish reversal. So conversely, when the price rises without corresponding new highs in the oscillator, anticipates a bearish reversal. This knowledge alone equips you for trading. I'll now switch charts and execute several trades. Let's proceed. Alright, I'm entering a long position here. Let's analyze this immediately. We're seeing a clear downtrend, yet the oscillator has displayed some divergence here. The trend line connecting the oscillator low signal upward momentum. The rally indeed is initiated at this point, with the assets now showing strong upward movement. Notably, we're observing consecutive higher highs, confirming new bullish trend. So now we'll await the expiration. Let me reinforce the core concept. When price momentum decelerates, expect either consolidation or reversal. The oscillator's failure to establish new extremes precisely reflects this slowing momentum. So first position has closed profitably. We'll pause briefly before continuing. For context, I've selected the oscillator today purely by preference. Any oscillator, RSI, stochastic, MA, CD would serve equally as well. So all of them from highs to lows may diverge from price action, providing us with quality entry signals. So we're entering the market again. Let's switch to the more popular 1 minute time frame now. The same movements occur here, it's just on a smaller scale. We can identify individual corrections as independent trends or spot oscillator divergences. However, I recommend applying this strategy on at least 5-minute charts or higher time frames. This approach proves more reliable for securing profits since lower time frames frequently produce false divergence points and signals. So yes, this happens sometimes. I frequently discuss multi-time frame analysis in my Telegram channel, link is in the description below, where I post free trades for my students. You can join now and you see how it is. Either read my trading insights or copy published signals that you get from there. And there we have it. Okay, good. Just close another profitable trade, now preparing to enter on the same chart. So why not execute multiple profitable trades within a single divergence setup? This trading technique exists precisely for this purpose. We wait for the price oscillator divergence, then take positions in opposite direction. So this approach enables executing 1, 2, 3, even more consecutive profitable trades when identifying divergence promptly, as we currently are demonstrating. I trust you found this charting technique valuable for incorporating into your regular trading routine, particularly in oscillator-based strategies. That said, I don't recommend trading exclusively on divergences. I won't tell you to do that. While useful, they are limited. So merely detecting momentum deceleration always, complements them with fundamental technical analysis, support, slash resistance levels, trend structures, and local price zones. Successful trading requires synthesizing, multiple analytical components. Today, you've acquired one of the most underappreciated tools among novices, yet highly favored by professional traders. Oh, it looks like we've closed our position profitably again, marking a conclusion in today's trading session. Let's proceed. I want you guys to like, comment, subscribe, and also share this video. Let's grow this channel. I'll see you guys in the next one. Comment, subscribe, and also share this video. Let's grow this channel. I'll see you guys in the next one.